Good morning, this is Sam Gurung from Beta 2 Limited with this morning's market report. Day today is the 6th of July 2015. Let me start by talking about the Greek referendum which took place over the weekend. The vote was no. This was no in regards to the proposal laid out by its creditors. 61% of people favouring Cyprus's government's proposal in regards to going against the austerity measures laid out by the creditors, and only 39% in favour of that. Now, where does this leave Greece? In regards to the Prime Minister of Greece, he believes that this mandate allows him to go back to his creditors with a stronger negotiating power, and therefore will be in favour of obviously the Greek people's will. And he does not intend to see Greece breaking away from the Eurozone. In regards to the markets, what it thinks, well, markets think that the ball is firmly back in the Eurozone's creditors sort of court. It's up to them to decide whether they're willing to obviously negotiate further, accept the proposal, and whether basically they want to allow Greece to remain in the Eurozone. In regards to what the Eurogroup leaders think, well, they actually having more wait-and-see approach. They basically said that they will wait for the proposal, they'll review it and take it further. So for now, uncertainties in the markets, people also don't know what's going to happen. What may decide the outcome will be, firstly, we've got the ECB meeting today. They'll be talking about potentially extending the bailout to Greece. Well, right now we know that there are capital controls in Greece at the moment. The banking systems are pretty much ruined. They've only got liquidity to survive up to a couple of weeks. So on the back of that, they need liquidity short term, and it'll be up to the ECB to decide. That meeting takes place today. Tomorrow we've got the Eurogroup leaders meeting. They'll be again talking about the Greek debacle and also laying down certain plans to move forward. So these two meetings will be key short term in regards to where Greece heads. JP Morgan actually come out overnight, and they say that on the back of the referendum, the most likely path they see Greece sort of following is a Europe exit, which obviously could be, which could cause a lot of turmoil and uncertainty in the market. Now, in regards to how this has impacted financial markets in general, let me start by looking at equities. European stocks opened lower on back of the Greek referendum, where Asian stocks also fall overnight, and we saw US futures down as well, again on back of the uncertainty. In regards to the FX market, Euro was the weakest currency out there, pretty much fell against all its major sort of counterparts, falling around 0.5% against the dollar when it opened up, and falling 0.7% against the yen, gapping down on both those currencies. In regards to the bond markets, we saw treasury yields fall down in the US and in Germany. However, Italian and Spanish yields actually went up on back of potential contagion risk. Now, moving forward, focusing on the euro as a currency, markets at the moment feel that the losses may be limited. And if you look at sort of what's been happening in Greece, the euro has been fairly resilient. The reason for this is we expect the negotiating to linger on, therefore there's no imminent Greece exit if that was the case. At the same time, fundamentally, your economy does seem fairly sort of robust. We're seeing economic data coming out positive in the Eurozone over the last coming months. Bear in mind, Greece only sort of factors shows for the 2% output in the Eurozone economy as a whole. Therefore, the impact, certainly for now, is expected to be limited. But at the same time, we also see a lot of mixed data coming out in the US. So on the back of that, the expectations of the Federal Reserve increasing interest rate has been shifting dramatically. So on the back of that, what we're seeing is volumes very high on euro dollar, currently accounting for 24%, therefore giving a lot of weight when it comes to trading. We're seeing a lot of sort of moving parts or variables in regards to what's impacting the euro dollar, and therefore, to give an example, even though euro actually gapped down, let's say against the dollar overnight on back of the referendum, this morning we've actually seen it regain most of its losses. So hence why it's not an imminent sort of downturn in the euro. However, volatility is high. Long term, euro is expected to sort of weaken. Credit Suisse have actually come out and they said that they still expect euro dollar to fall towards parity by this year. Citigroup, one of the sort of big investment house, and the same camp expecting it to fall down further. But short term, losses may be limited. However, volatility will be high. That's it in regards to Greece. That's it in regards to how that's impacted the market. I'll see you again tomorrow with further market report. Until then, thank you very much for listening to me.